Hey traders, Akil Stokes here, and welcome to another Forex Weekend Review video. If you are one of our 70,000+ subscribers, I just want to start off by saying thank you. As you guys know, I set a goal earlier this year to try and reach 100,000 subscribers on this Trade Empowered YouTube page. And each time you guys share, each time you guys hit that like button, it just helps so much. So I want to say I appreciate your support, and please keep it up. If you guys are brand new, if this is your first time stumbling across my YouTube page or our YouTube page here, my name is Akil Stokes. As mentioned before, I am a full-time professional trader. I'm also a trading educator over at tradeempowered.com. And believe it or not, but not too long ago, I was in a very similar situation to what you most likely are in now, meaning I was struggling with some aspect of my trading. I was vulturing around the internet looking for help, watching and taking in everything I can. And hopefully I'm that person that you stumble upon that can help give you that tip or help push you in the right direction so you can achieve your trading success. I do advise that you go back and watch at least 5 of my previous videos just to get a good feel of how I am as a person, how my views on trading psychology, and also how I analyze a price chart. So that's your homework if you're new. Make sure you watch to the end of each of those videos, as well as I usually put on some pretty educational rants at the end. So in today's video, I titled it Adapt or Die, or at least that's the idea that I plan on titling it. And that topic came from a few different directions. One, this is the time of year where I used to always struggle. September used to be an historically bad month for me, and it was adapting my trading which allowed me to find success. So I want to talk a little bit about that. I've also been reading a new book by Brett Steinbarger called Trading Psychology 2.0. Not sure if you guys can see it. I'm in the really beginning phases of it, so I can't really critique it and say if it's a great book or not, but I can tell you I've read some stuff in the past by the same author, and I absolutely love his take on psychology, so I'm pretty sure I'll enjoy it. And then lastly, the topic idea came from a comment left here on YouTube. You guys know I do read and respond to each and every one of your comments, assuming I see them or assuming you don't have it blocked. And the comment was talking about really the trading year and how it goes. We all know that trading in the markets are sometimes very busy and very silent on a day-to-day basis, depending on when you're trading. Typically, the London session gets things going. Then the London-New York cross is when it's the most active. And then it starts to die down during the New York afternoon. And in the Asia session, it's pretty much dead. Well, the trading year is very similar as well. January through May is very active in the markets typically. And then once we get to summer, it tends to slow down. So think June, July, August. Now, it's very important that you understand slower markets doesn't necessarily mean non-profitable markets, and that's kind of the myth that's out there. We always talk about how the summer is slow. It is typically there's less opportunities to be involved, and we'd rather take that time to do continued education. But it doesn't mean that you can't make money, and we've done a good example of that over the past 4 weeks. If you guys checked your inbox today, you probably received an email about our Syndicate Program and how we've made over 1,000 pips in the last 4 weeks, and I would definitely call that profitable. So just because it's slower doesn't mean it's not profitable, but it is slower. There are less opportunities. It could get a little bit boring. Now, September is when the market starts to pick up, and that holds momentum through about the end of November, about Thanksgiving, and then it slows down until the end of the year. Now, I mentioned earlier, September has historically been a poor month for me, and it was really based off my style of trading. You see, September is typically very directional, and think about it like this, right? A lot of professional traders take off during the summer, especially these last few weeks of August, going on vacation before the kids have to go back to school. And imagine it like a parent leaving their kids home alone. Well, while the kids are home alone, they can do whatever they want, right? They can move this around, they can move that around. And when the parents get home, they notice that this has shifted, the TV controller's over here, the dishes are there, what have you. And the first thing they do is they start reorganizing it the way that they think it should be. And we see the same thing with trading. A lot of professional traders will come back into markets. They'll look at prices and say, well, I don't think it should be valued here. I don't think it should be valued there. And they'll start establishing their positions again. As a result, again, we see a lot of directional movement. Now, when I first started trading, I was strictly an advanced pattern trader. I guess I shouldn't say when I first started. After I first got educated and came through my training course and then failed, I restarted my trading career as an advanced pattern trader only. And for you guys that are familiar with advanced pattern formations, most advanced pattern formations form during areas of consolidation. So when the market is kind of going left and right, kind of sideways, and not really showing any pure directional movement. Well, if you do the math, if advanced pattern formations do well during consolidation and tend to do not as well during directional movement, and September typically has a lot of directional movement, it's no surprise on why I struggled for many Septembers. And it took me a while to adjust. It took me a while to adapt. But as I evolved as a trader, I began to implement different styles into my trading arsenal: counter trend, structured trend continuation, and having those different styles, having those different, I guess, tools in my toolbox allowed me to turn what was an historically bad month into a pretty decent trading month over the last few years. So to the trader that asked the question last week about would it be better to only trade during certain times of the year, or would it be bad if a trader were to start halfway through the year and not at the very beginning of the year, it's not necessarily true. I think you can be profitable no matter when you start. You can start trading right now in August and end out the year profitably. However, depending on your trading style, right, you may be able to come across trends in the year that just may not work well with your trading. Now, it takes a lot of experience to do that. You need to know what you're looking for. You need to create a big enough sample size, and that's when all the testing and stuff comes in handy. So don't just go out there and have one bad trading month this year and assume that next year is going to be the same. I think that would be pretty foolish. But if you're consistently evaluating your trading, you may be able to catch little hints like the one I just dropped for you. Now, I do think that trading, to be very, very good at trading, you do need to evolve. I don't think you can have one strategy and trade that one strategy, but I think, and again, it's tough because there's so many ways to make money in trading. But I think that being an all-around trader gives you an edge because it allows you to take advantage of different market conditions, no matter what price is doing. If we're consolidating, you have a technique that will benefit during that. If we're directional, you have a technique that will benefit during that. And it really helps to smooth out that equity curve, right? So, I guess the problem is that a lot of traders aren't able to evolve because they don't have a firm foundation of trading knowledge. They only have a system. All they know is a system, but they never have those foundational elements of how to read a price chart. And at least the way we teach here at Trade Empowered, the first thing we do is teach how to read a price chart. And the way we teach it, it doesn't matter whether you're going to end up being a counter trend trader or a trend continuation trader. Those foundational elements are going to allow you to really go on to any path and be successful. And what I want to show you now is an example of how we do that. It's called the IPDE process. Now, the clip is taken from Tuesday's live trading room session. Each week we have many brand new members join us. So I like to be patient with the first round of analysis. That way our newer traders can get a feel for the process that I go through when I'm breaking down a price chart. And what you're going to see is how we break down the euro dollar. We're not looking for a trading opportunity. I'm not firing off any trades, but the process that I go through in reading a price chart that can set up an opportunity for you, whether you're a counter trend trader or a trend continuation trader. So check it out and I'll be back in a little bit. Euro dollar. We always want to start with our IPDE process. So let's do this together, guys. IPDE, the first key in our top-down analysis is the I. What does the I stand for? Come on, give it to me. Identify. All right. Let's identify. What are we seeing on a price chart? Where is price action? What was the last move that price action made? Are we at structure? Are we above structure? Are we below structure? Right? Higher high, higher close. We just broke previous structure highs right here. Higher high, higher close tells us that we can make the prediction that price action is most likely to do what? Continue bearish or continue bullish? All right, so we identify price action is above structure, right? We're in a trend continuation right now, right? Our most recent move is a new structure high. Next is our prediction. Where is price? There's two steps to the prediction. The first, where is price action likely to go? Where would you guys say? I'm kind of cheating for you guys because I've got these DSR levels on there. That really makes it, Charles, we make it too easy, Charles. We make it, for those who have the DSR, we make it too easy. I used to like to do this and everyone's guessing, well, where's structure at? Well, just look at the big red box, right? I guess it's helpful. But yeah, price action is likely to come to our next level of previous structure resistance up here around the 114 even handle, right? $1.14. So, and again, in this area. Next question is not only is where is price action likely to go? How is it likely to go there? There's two ways. What are the two ways? If price, and this is all prediction, guys. I'm not saying buy it right now because we know it's going to happen. We never know what the market's going to do, and it would be foolish to place a trade based off what we know the market's going to do. But we're setting ourselves up to react. If the market does this, then we're going to react this way. We're just trying to make the best prediction possible. So if we're predicting that price action is going to come up into this level, there's two ways it can come up to this level. It can just keep going straight up, which we may well see in 15 minutes. Or we can put in some type of retracement and then continue up. If we're going to put in some type of retracement or pullback, then where is that retracement or pullback likely to come into? Previous structure. Technically, your kill zone is going to be like this. It's going to be a big kill zone, so you guys are going to hate me for this. But this will be the first level right here, 112.35. This is going to be your kill zone technically, but of course we can narrow that down. But if price action is going to come back down, we would predict a move in the structure and then a continuation higher. So do me a favor, guys. Type in if you are a counter trend trader or a trend continuation trader, or both, I guess. All right, we got a counter trend trader, trend continuation trader, both. We got TCT, counter trend. There we go. All right. Well, here we go. Counter trend traders, listen up. Your next opportunity to short is right up here. Trend continuation traders, listen up. Your next opportunity to go long is right down there in anticipation of the market coming here. Boom. Something for everyone. Make sense? Same analysis though, right? Same exact analysis. We don't need special trend continuation analysis and special counter trend analysis, right? Same analysis. IPDE, identify, predict, decide, execute. Right? The only thing that's different is your decision on where you're going to attack the market. Are you going to look to buy down here in anticipation of here? Or are you going to look to wait till the market gets up here and sell up here? But the same analysis is done. That's the point I want to make. A lot of traders, get asked this question a lot. Well, how do I do this type of analysis versus that type of analysis? It's no specific type of analysis. It's general analysis and the general skill of reading a price chart. And if you know that skill, you can be any type of trader you want. But you need the skill, the general skill of reading a price chart. Makes life so much simpler. So as you can see, that general analysis was able to set up trading ideas for both a counter trend trader and a trend continuation trader. And that's the value of just having a foundational knowledge of how to read a price chart. It doesn't matter what type of trader you are, the analysis is going to be the same, and it actually complements each other. Right? If you can understand where counter trend traders are looking to get involved at, it's going to be a big help when you decide on where to place targets for your trend continuation trade and vice versa. So it's great to know both. Now, when I train traders that come through my training course, I always start off by saying, learn a single technique and master that technique, right? You don't want to overcomplicate things by doing everything at once. And that was kind of the theme of last week's video. And I do believe that's true. But as you get older as a trader, I guess as you gain more experience, there should be that drive to add more tools to your toolbox. Now, the cool thing is you can actually be consistently making profits, say trading cipher formations, and at the same time continuing your education and growing, slowly adding new tricks to the trade. No pun intended. That's the cool thing about trading. That was my story. I started trading Gartleys only. And then while I was making money trading Gartleys, I added bat formations, added cipher formations. And year after year, I've been trying to add a little bit more to my trading till I get to the point where I can do a lot of things right now. But that's just part of the adaptation process. And in the book, there was a great quote by Darwin, Brett Steinbarger quoted Darwin in Evolution in General, where he says, it's not the strongest or the smartest animal that survives, it's the one that's able to adapt best to change. And I think the same thing goes for trading. It's not the smartest trader out there, it's not the one with the best system, but it's the trader who can adapt to different times and different situations, that's going to survive the long run, because markets do change, guys. There's a lot going on out there in the world, and some years you're going to get very directional movements. Some years you're going to get low volatility, like back in 2014. And those traders that are able to adapt and adjust, they're going to fare the best during those situations. Now, when I talk about adapting, it means being open to change as well. And that means not being locked into a single idea, continuing to grow, continuing to learn as a trader. And sometimes you notice that what you thought in the past wasn't necessarily true. And sometimes you have to throw that pride and that stubbornness away and just work on what's best for you. Now, running a little long in this video already, I want to keep it short. So what I'll do is next week, I'll follow up on this video. I'm not sure if it'll be on Thursday or Tuesday, but again, if you're subscribed, you'll get an email or notification whenever the video comes out. But next week, I'm going to put out a video explaining a concept that I had to adapt to, something that when I first started trading, I had one set view on it, and over the past few years, I've flipped 100%. So I'll show you guys that in next week's video. But thank you as always for joining me. I'll leave a bonus video, or bonus portion of this video, with a little rant from our live room, and I'll see you guys next week. Take care. Andrew says, I started trading seriously last month with my own tactic. I made 750 pips in July and 400 pips this month so far. Is that okay? That is tremendous. That is tremendous. I would say that would put you in line with obviously you got to know the return on investments, but if you can consistently do that, you will be one of the best traders out there. Now, can you expect that consistently? Probably not. So make sure you stay level-headed, make sure you stay grounded. You can't expect that every month. But shoot, you've allowed yourself a big cushion to suffer a drawdown, right? If you take a 500 pip drawdown in September, guess what? You're still up 650 pips. So yeah, that's really good. The main question is this, Andrew, did you stick to your rules? Were they all good trades? And how many mistakes were made? That's the real question. Because consistency is the key, guys. I don't want to burst your bubble. I just want to give you a realistic expectation of what to look for. Many traders get off to these massive hot streaks, but they can't maintain it. And the problem is when they can't maintain it, it frustrates them. When it frustrates them, they start deviating from their plan. And when they deviate from their plan, that's when they start losing money. You see it so many times, right? You see people start off. That's why I'd rather start off trading. I'd rather be horrible starting off, be honest with you. At least I know it can just get better. But we see a lot of traders that get off. Oh, man, Akil, first 2 months, 500 pips, 600 pips. And then the third month is 200 pips, right? Which is still a good month. But now they're like, 200 pips it's only half as much as I made. I got to do something different, right? They start chasing that high of 1,000 pip months. And in order to chase it, they start messing up, and they end up going backwards. So Good start. Good start. But main thing is you followed your plans, which is great. That's what I want to hear. Come on, Euro, load up. How can I best back test without going manually? Um, there are systems out there that can do it for you, especially if you have a mechanical system. My question would be this, Andrew: why would you not want to back test manually? I don't see unless you're trading a mechanical system. I think if you don't back test manually, you're defeating the purpose. Now you can back test, you can automate it and then back test manually as well and compare the results. But I think it, I yeah I don't. The whole purpose of back testing, guys, is to grow that belief, right? Is to take trade after trade after trade and build that reticular activating system, right? To see your opportunity over and over and over again, to see how it reacts during trending markets, how it reacts during consolidating markets, how big the win streaks are, how big the losing streaks are. Sarah says maybe time consuming if he is at. Oh well, don't trade, right? If you're going to be like the Xbox guy, and I'm not saying you're doing this, Andrew, but for people that are saying, using that excuse, I don't have time to backtest, well, you don't have time to be successful. That's the way I see it. If you don't have time to dedicate yourself to backtest, you don't have time to be successful. Right? As a basketball player, I don't have time to work on my foul shots. Well, I guess I don't want to be good at it. But you need to go through that mental backtest, the mental battle of backtesting. You need the backtest and have that year where your system blows up in your face and you're like, oh man, this stinks. You need to have that time where you take 10 losing trades in a row and you're like, man, whatever Akil taught me doesn't work. This is dumb. And then realize that you end the month in profit or end the year in profit and be like, wow, I took 10 straight losses and it still came back and won. Wow. You need that because guess what? It's going to happen in real life. And you need to have confidence. You need to be able to take a 10 trade losing streak in real life and be like, it's okay. When I did my back testing, I took 15 straight losses and I still came out profitable. So this is normal. It happens. Because if you don't, you're going to crack under the pressure. If you don't, you're going to crack under the pressure and you're going to burn like 90% of traders do. You're going to burn. And we see it happen over and over again. By the way, second target's hit on Aussie dollar.